Right now, SMX Security Matters PLC is trading at exactly 27.25 USD, which marks a significant intraday jump of $4.14, or roughly 17.91% in today's session. This movement is catching a lot of eyes on active trading boards because it represents a massive shift in momentum for a company that has been under intense pressure for months. Most people looking at this ticker right now see a small-cap company finally getting some relief, but the reality behind this move is far more technical than just a simple wave of buying interest. While the headlines might focus on the price action, the real driver here is a massive cleanup of the balance sheet that happened just a few days ago. Security Matters recently confirmed the full conversion of over $20 million in convertible notes into equity. When a company with a market cap this small wipes out that much debt by turning it into shares, it fundamentally changes the risk profile for anyone using an individual brokerage to play the volatility. It removes a massive overhang of potential selling pressure that usually comes with those types of debt instruments, and that is why we are seeing this sudden explosive energy in the price today. The common belief about SMX is that it's just another high-risk microcap caught in a cycle of dilution and reverse splits. After all, if you look at the long-term chart, the destruction of capital has been staggering. However, the reality we are seeing today challenges that narrative by showing a company that is aggressively trying to simplify its capital structure to attract more stable interest. By getting rid of that corporate-level convertible indebtedness, they have essentially told the market that the era of toxic financing might be behind them. For investors who spend their time on investing sites or managing their own portfolios through a fidelity trading platform, this is the kind of detail that separates a temporary pump from a structural shift. The volume today is also telling a story. We are seeing millions of shares changing hands, which is significantly higher than the typical daily average for this stock. This suggests that it isn't just retail traders on a Robinhood app chasing a green candle, but likely some institutional positioning or short covering triggered by the improved financial flexibility the company now enjoys. When you look at the broader landscape of online investing right now, there is a lot of noise. You have the massive moves in Tesla stock and the consistent growth of Apple stock drawing all the oxygen out of the room. Even Nvidia stock seems to dominate every conversation about technology. But for those looking at investment help or self-investing strategies, small-cap sleepers like SMX offer a different kind of tension. The expectation was that SMX would continue to slide until it faced another delisting notice. The reality is that management has managed to pivot toward a circular material strategy that is actually getting some traction. They recently announced plans to enter the denim and recycled denim market with their traceability technology. In a world where global regulations are becoming incredibly strict about supply chain transparency, being able to prove the origin of a material isn't just a nice feature anymore. It is becoming a requirement for doing business. The daily swings we are seeing are reflective of this tug-of-war between the company's past struggles and its future potential. If you're using something like Schwab Intelligent Portfolios or other robo-advisors, you probably won't see a name like this pop up because the volatility is too high for those algorithms. But for those of us using an interactive broker's platform or a Fidelity brokerage account to find specific opportunities, the sector momentum in materials traceability is hard to ignore. We are seeing millions of shares changing hands, and when institutional volume shifts toward companies that provide proof of origin solutions, it historically leads to big moves over the course of months. Even with Schwab Intelligent Portfolios avoiding the high-risk plays, the daily swings are reflective of this tug-of-war between the company's past struggles and its future potential. If you're using something like an interactive broker's platform or a Fidelity brokerage account to find specific opportunities, the sector momentum in materials traceability is hard to ignore. We are seeing millions of shares changing hands, and when institutional volume shifts toward companies that provide proof of origin solutions, it historically leads to big moves over the course of months. The gold and silver tracking space is another key area where Security Matters is making moves. They have already started partnering with refineries to ensure that conflict-free actually means something. This is the part of the story that the market is finally starting to price in. In past reports, the company was heavily criticized for its lack of revenue and its reliance on equity raises to keep the lights on. That criticism was valid, but the recent debt-to-equity swap has changed the math. By eliminating $20 million in liabilities, they have cleared the path for potential partnerships that might have been scared off by a messy balance sheet. Before we go any further, I want to hear from you. Comment below with the ticker symbol of the small cap stock you are most excited about for the rest of this year, or let me know if you think these supply chain regulations will actually stick. Looking at the business model specifically, Security Matters operates as a business-to-business white-label technology firm. They aren't trying to sell a consumer product, they are selling a verification layer. They have already started making moves into the gold and silver tracking space, partnering with refineries to ensure that conflict-free actually means something. This is the part of the story that the market is finally starting to price in. In past reports, the company was heavily criticized for its lack of revenue and its reliance on equity raises to keep the lights on. That criticism was valid, but the recent debt-to-equity swap has changed the math. By eliminating $20 million in liabilities, they have cleared the path for potential partnerships that might have been scared off by a messy balance sheet. Now, we have to talk about the risks because the reality is still very heavy. Despite the 17.91% gain today, the stock is still trading way below its 200-day moving average. The long-term trend is still technically broken. When you are doing online investing, you have to be honest about the fact that this is still a company with limited revenue and a history of significant losses. The float is also relatively small, with less than 1 million shares available for public trading. This is a double-edged sword. On one hand, it allows for these massive intraday moves like we are seeing today because it doesn't take a lot of buying pressure to move the needle. On the other hand, it means that if the sentiment flips, the exit can be very crowded and very painful. This is why many people prefer the relative safety of Fidelity ETFs or a managed SoFi active investing account rather than picking individual small-cap names. The future outlook for SMX depends almost entirely on its ability to convert its pilot programs into long-term, revenue-generating contracts. The catalysts are there: stricter ESG reporting requirements in Europe and the US, a growing need for brand protection in luxury goods, and the global push for a circular economy where materials are recycled and reused. If the reality of their commercial rollout meets the expectations they've set with these recent announcements, the current price of $27.25 might look like a floor in the long run. However, if they fail to land a major partner, or if they have to go back to the well for more capital in a few months, we could see the return to the downward pressure that has defined the stock's history. When you compare this to the stability of something like Fidelity Wealth Management or the diversified approach of SoFi investing, you are looking at two different worlds. One is about slow, steady growth, and the other, where SMX lives, is about high-stakes technological adoption. For the self-investing enthusiast, the key is to watch the institutional volume. If we see sustained interest on the Interactive Brokers trading platform or high-volume alerts on the Robinhood app for several days in a row, it might signal that the smart money is finally taking a real stake. To wrap this up, what we saw today was a perfect example of a tension-filled market reaction. The expectation was more of the same: more debt, more dilution, more sliding prices. The reality was a clean balance sheet and a bold entry into a new market. That contrast is what fueled the 17.91% surge to $27.25. Security Matters is no longer just a struggling tech firm. It is now a clean slate speculative play with a clear target market. We will be watching the next few weeks closely to see if they can maintain this momentum or if the reality of their operational costs catches up to them again. Stay sharp, watch the volume, and always trust the data over the narrative. As we continue to monitor the movements of companies like SMX alongside the giants like Apple stock and Nvidia stock, it is clear that the technology behind how we track physical goods is becoming just as important as the goods themselves. For anyone looking for investment help, the biggest takeaway here is to look past the intraday percentages and understand the structural changes in a company's debt. SMX has done the hard work of fixing its foundation. Now they just have to prove they can build a house on it. Whether you use the Fidelity mobile app to trade or prefer the depth of the Interactive Brokers platform, keep this one on your watch list. The expectations have been reset, and now we wait to see if the reality of their commercial success can actually exceed those new standards. If they can execute on their denim and precious metals projects, the market might finally forgive the years of volatility. But for now, celebrate the green day, stay cautious of the low float, and keep your eye on the next quarterly update. This is a high-speed game of verification and visibility, and SMX is right in the thick of it. In the end, authority in this market comes from knowing the difference between a news-driven spike and a balance sheet-driven recovery. Today, SMX showed us a bit of both.